Hey traders, just want to make a quick video reviewing the trading day for FOMC rate decision yesterday. So today's Thursday, the 18th of September. So Fed rate decision was yesterday, the 17th of September, 2025. So I just want to make a quick video on how I trade the FOMC market days. Sorry, the FOMC rate decision days. They are extremely volatile. I've blown up accounts trying to trade it incorrectly, and now I just want to share how I've started to formulate a strategy around it, right? So really quick, I cleared my chart so that we don't see any of the analysis that I had earlier, and we'll just basically go from scratch. So first, I want to look at the extremes, right? In trading highly volatile days, the strategy that I focus on and probably really is the core of my setup of my trading is the fact that we will look for failed breakdowns and failed breakouts, right? And these are also known as like liquidity traps. So first of all, I did do the replay so that we're starting right before the FOMC decision. So what I'll do, I'll take some lines. I'm actually going to mark places that I feel that have had a cluster of highs and lows, right? So right here we had some highs here. We couldn't make it up on this last one. So I'm going to mark that one right there. And these are just levels. And then I'm going to get to kind of more general levels. And then I move into more of the levels that I want to focus on. So this would be one level right here. Let's see, probably right there as well. And the reason I'm making this video is I know there's a lot of people out there that are like, oh, how do I make levels? How do I look at this? How do I look at that? There are a plethora of ways to note levels in your charts, right? And some of them are super, how do you say this? Super obvious, like here, right? But as we can tell, something that's super obvious tends to not work because it is super obvious, especially in NQ where the order book is a bit thin. So then price doesn't just respect a level, it kind of surpasses the level, right? Because there's so many traders in the world that these orders going back and forth, it's not just going to stop at, you know, the 355 exactly. It's going to go a little past, it's going to go a little before. So just knowing these levels, it's kind of how would I say is it's kind of just a visual for you to keep in mind, right? It's not something that you should just trade off of all of a sudden. Okay, so going back. I find this level to be important right here. Cluster, cluster, a bit of cluster, a bit of cluster. Okay. Um, I actually will do this right here as a cluster. Okay. Now that we have the clusters in, now, okay, FOMC, it's always a possibility we can go all the way up here. It's a possibility we could crater down to the center of the earth all the way down here. But probably won't be that today, right? Or yesterday. It probably won't, especially if you've been keeping up with how FOMC has been. They're more than likely not going to change rates. Prior to the meeting came out, they actually did not change rates. So now let's continue. Now these are general levels. Now I want to kind of dive deeper into the more extreme levels where I do feel like liquidity traps are more than likely. So I do like to color these yellow. Let's see. This is a low down here. Technically, this could be considered a cluster of lows because it has some lows down here. I wonder if we could see this on the chart. Let me make this bigger because just in case. Okay. Now, the reason why I have these as gold is in my mind, I want to make sure that these are untouched lows and highs. And the fact that they're untouched, there potentially is liquidity sitting there, especially if these lows and highs have had a quick and a huge amount of reaction, right? So these lows right here, obviously we had reaction because look what happened, right? We had an impulse move up. Here, impulse move down. It's not as impulse. This happened overnight, so the liquidity is not as big. But things like, for example, this level here and this level here. Okay, now, actually, let's do one more. Now, like I said, we could keep going. There's lows all the way over here, right? Now, can we? Of course, it's always a possibility. Is it more than likely? Not really. So we'll stick with this and then we'll just trade off of that for now. Now, these are the levels, especially if you know NQ and you've traded long enough, you know that these false breakdowns happen all the time. If I could, let's see. This one is kind of a false breakdown that took a while to recover, right? You had this low here that formed, you had a huge amount of buying here. Then we undercut it. And then we recovered and never looked back. And we're, all-time highs. Once you trade NQ long enough, you'll realize these traps and you'll know what to look for. Easier said than done, but we'll work together on that. Okay, so going back. Now that we noted our lows, like I said, this is a pretty easy strategy. It is really simple, but executing it, not the easiest. But it does work. Okay. Now, what I like to do is if I, oh, actually I missed one right here. Sorry. Now, actually, do I want to put this one? There's a lot of nuance to this, so hmm. We'll stick with that for now, and then we'll see how price reacts, and then we'll see where we could find trades, right? So another thing I like to do is incorporate volume profiles. And the reason why I want to incorporate volume profiles in this is because if price were to surpass certain levels, certain key levels that I've marked here in gold, the price probably will enter, especially in an uptrend, will enter some sort of range in the past. For example, this range right here, okay? And once you start to do these more and more, you'll realize that you have to kind of play around because sometimes these um, these ranges will be of importance, and I'll show you that in a second. So if I look at this low right here, you have a range right here. Now, if I were to have taken this range and just kind of marked it down, this is the breakout from here. This is probably the end of the range right here. Okay. The POC is what I'm trying to focus on. And I'll keep it here for now, but this level right here, the POC is something that I like to keep an eye on. Now, like I said, it's something I like to keep an eye on. It's not something I like to just trade all of a sudden off of. Okay, so next, we have this POC here. I'm actually going to copy and paste this level. I'm going to change the color. We'll do gold. We'll match the color. Right, and then I'm going to note it as POC. Not try to make this video too long, but I just wanted to teach you guys this. And if you find any value in it, I will be coming out with more educational videos like this. Please like, please subscribe, comment if you have any questions or any other topics that you want me to cover. Okay, so we have that. I'm going to delete this so it's easy for my eyes. Okay, next. This is the next range. Now, you have this range here. You also have liquidity potentially here. I'm going to take this into consideration and go to the breakout. Okay, so now as you can see, we have some high volume nodes that we can use, but we're going to focus on the POC. So I'm going to go to the POC right there. Okay, and this would be the POC of this range. Now, let's try something, and we're not going to take into consideration this side of the chart. We're only going to take into consideration this part of this range, right? The POC is still the same. You got a high volume node here. Okay, next. We'll delete that. Now, if we were to surpass this level and come down, my question is, where would we potentially see a low, or would potentially see price try to test the liquidity there, and then see if we can make a decision whether the buyers or the sellers are going to win, right? So below this, we have this range right here. This range right here. Now, I could already see where a big high volume node is going to be. You have a high here, 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 a bunch of testing, right? So now let's take that into consideration, do a custom, sorry, a fixed range volume profile. Let's go there, right? So a lot of that liquidity is here. Now, I'm going to actually try to test something. The breakout of this range was right here. Sorry, the breakout of these highs was right here. So I'm going to take this into consideration, double check it. POC is here, right? So this kind of gives more, how do I say, strength in confidence of this potential POC and this one as well. As you can see, there was a very strong reaction here. Okay, so now we have our level set. Let's play back the FOMC decision. Actually, we'll do it one by one. Okay. We had our first breakdown, failed breakdown, right? We had our first failed breakdown. Now this POC, like I said, a POC is not something to just trade off of, but it is where a lot of the liquidity is. So if they are going to make a big move, they're going to use that liquidity as a launching pad, right? As you can see here, we touched the liquidity. I'm going to get rid of it because of the fact that we didn't have any strong reaction to it. We would actually probably have more value doing this on a 5-minute chart just because the candles on the replay, they do move pretty fast. So let's go. Oh, it's kind of hard to see. We'll stick to this. Okay. Next, let's move on. Okay. So let me tell you how I would have traded this. Let me zoom in. Obviously, it is a highly volatile day. For that very reason, you're already going to have to know that you are going to size down. You are not going to trade your normal size that you do on any average day. Okay. Key level, failed breakdown, right? Now, if I were to have taken a trade here on the reclaim of this key level, right? Because this would have been technically a liquidity sweep. If I were to have gotten in the trade right before, right after the reclaim of this level, right? I'm risking 32 points. Now, on one contract on NQ, where's my calculator? 20 times 32. You're risking $640, right? So just do the math if you're trading M and Q. Now, if we were to measure a long position here, here's the low. My question is, if you are going to make this long trade here, where are you going to get out? How do you know where to get out, right? And the fact is, you don't. What you can do is try your best in terms of taking profits along the way, or if you are feeling risky, you can move your profits. You can move your stop up to break even or even slightly above break even if you're willing to risk those profits that you currently have. So first trade right here. I have this level here that I drew prior to this price action. I would have taken profits here. Now, we take profits here right at the 76 mark. So you'd be taking profits at 76 points with around a 2 RR. Okay? At this point, I've already taken profits because I have money in the bank that is not at risk. I will move my stop up to break even. Now, I move my stop up to break even. What does that do? Price came down, I get stopped out. But what does that tell us? We had we made some profit, we made some money, we didn't lose money on the runners. Boom. Now, let's move forward. Okay, so as you can see, sellers are still taking control of the day. We are still trying to push down. Now we once had a false breakdown or a failed breakdown, meaning the sellers could not push this lower, and now they're trying again, right? So now I would want to keep an eye on potential levels below because that is where we would find value for another trade. Keep in mind, the sellers lost this battle right here. Now we are going to ask ourselves, are they going to win the battle or are they going to lose again? Obviously, this is trading in hindsight, so we just have to think clearly about what we would do realistically in the moment, right? And try not to separate and try to separate our bias because of the fact that we know what's going to happen. Okay, so we're moving forward. What do we get here? We had the POC touch. This was a prior cluster of at a key important level of clusters in terms of highs and lows, right? Highs, and then we broke out here. Now, question is this a level in which we want to trade? Now, if I wanted to chase this trade, yes, of course I could have. But realistically, we have to be as objective as possible here because this is hindsight. I would not have taken this trade because of the fact that the POC, like I said earlier, is not something you should trade off of. It is just it is just a level in which there has been tons of volume traded back and forth, which has a lot of interest. Now, this level was not it wasn't something I would trade because I don't know what's going to happen, right? But now we knew how the market reacted. So I'm just going to mark this level really quick so that we have it for visual purposes. Oops, sorry. Next, let's move forward. Okay, here you go. Okay, my level of interest was once a place to buy, and now sellers took control and pushed it lower. Sellers are definitely in control. We pushed down from this low, made a new low. Pushed down from this low, made a new low. They failed once, they tried again. They failed twice, they tried again. The question is, are we going to push lower, right? So this is where things start to get a little difficult in trading an easy system, but not something that's easy to execute, especially in real time. Let's move forward. Okay, as you can see, we did move up. Now, I do want to mention these golden levels right here are levels that I would personally trade at. As you can see, we made a trade here on this level, and that's where I traded. We have profits for the day because of this trade, even though we got stopped out of runners. Now, judging from this trade, POC was the level of interest, but I don't trade that. What I trade are the gold ones, my key levels. If I saw this level come down and touch, technically we did break it, barely. But what does this tell me, right? A reaction from here, this was a level in which buyers took control. And now they're taking control again. So context is important when in trading. Oops. Context is very important in trading. It's not just the strategy, it's not just the level, it's the context in which it resides. Personally, I would have taken a trade here, right? Now question is, where would have you gotten in? Here's the POC. It was a level of interest. I don't trade off of it, but now we have more data. We had some buying reaction here. I personally would be comfortable taking a long at the, oh, that is not what I need. I would be comfortable taking a long here and risking the wick, right? Now, this happened pretty quickly. So up to you, but you could take profits here. You could take profits here like we did earlier. Now, this is all going to be your fair share of how you trade and how you want to manage risk. So for this purpose, we will take profits where we took profits last trade, right? And here already you will have about a 3.8 RR, 128 points on NQ. You're risking 33 points. So again, you're risking about the same as the last trade, well, at least on one NQ contract, 33 times 20. You're risking about 660. First, take profit, you're at 120, 128, right? That's about $2,500. Now, granted, if you're in one contract of NQ, you're not going to be able to take profits. So if you can only trade one contract of NQ, you have two choices. Either be okay with taking profits at your first level and calling it a day, or you trade MNQ, you use 10 contracts and you scale out that way. Now, what I do want to say is that when you take profits at your first level, take most of your trade off, and that means more than 50%. You do that consistently over and over again, you will be profitable, even on the days that you do take a loss. Okay, we're going to move forward with the replay. Nice. So we do see some movement up. I'm going to keep doing this until we hit the end of the day. We've reached the end of the day. Ding, 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 ding. We didn't reach this level, as you can see, right? I would have taken profits at this level, but we didn't. I would have had limit orders there. We didn't hit. So technically, at the end of the day, this is where we ended. So I'm going to take our trading tool. extend this so you could see the trade in its entirety. Okay, the whole day we did not hit the stop loss. I took profits at this level. So what does that mean? I move my stop to break even. Still, we didn't hit the break even. So now whatever trade and whatever runners I had, it's still there. You're catching a 202 point move for about, well, initially, oh shoot, is it going to let me? I can't do, sorry, 1 second. I can't show the RR if I'm at break even. Okay. So in this case, before I even move my stop to break even, we're at a 6 RR, which is really good, right? Moving to break even, you will only increase it. There is no risk anymore. So it is a risk-free trade. And you made 222 points. Okay. So that's the end of the video. I just wanted to do a quick recap of my core strategy of failed breakdowns and failed breakouts. Like I said, it's an easy strategy, no brainer, but the hard part is in the execution, and it does take practice. If you want more videos like this, please let me know. I'll do more videos as these trading days show these type of opportunities. And yeah, so that's it. If you like the video, again, please do like the video. Just give it a thumbs up. If you do want to see more content, I'm more than happy to make more videos breaking down things in ways that you can understand it. I know trading's already difficult as is. So thank you again for staying and watching, and we'll see you in the next video.